Hey everybody, I want to do a quick chart summary of the S&P 500 weekly chart in particular, and look at something that I know a lot of you look at, but I just wanted to do a little recap. It's the Fibonacci retracement, and show how on the from a weekly standpoint, the fibs have been right on target, and key levels of pivot and support. So let's take a look. I've got two Fibonacci lines drawn out here. I've got one that takes us to the full, from the spike back in late 2007, which is here, down to our crash there in early 2009. And that is the white dotted line Fibonacci retracement. It might be a little hard for you to see, but right here along this area, this horizontal area, let me go ahead and draw that for you. Basically that line is 61.8% Fibonacci retracement, and obviously a pivot point in the past. You see it here, you see it fall through, and then eventually fail it there, and you see, wish I could move this thing. You see it almost get there and fail, and then now we're right there again. So the question is going to be, just based on this long-term Fibonacci retracement, are we going to break through this level? Are we going to get through the 1225, 1226 range and open it back up? You'll also notice that this white line, which is the 50% retracement line on that same time frame, corresponds to resistance recently. There's some chop here. You see it stop here. You see a big fail through there. So it's relevant on the 50, and you'll also see that it's also relevant on the 38 as well. You'll notice that the most recent move bounced on that fib retracement line. Now, if we take those away, let me move those real quickly, and we take it into the most recent move, which is this purple line here, you'll notice that the purple and white basically are on top of each other here on the top, which marks major resistance from a Fibonacci retracement standpoint, because we have a longer term and a shorter term time period. But the bottom sits on the white. So essentially this range is within the longer term 61.8 and 38.2 Fibonacci retracement that went back to 2007. Now the real question is going to be is whether these fib lines hold as resistance again. It held here. It was a pivot here. So even though last week was bullish and we got out of this trading box, if you will, and held on to this Fibonacci retracement, 23.6%, you notice this orange dotted line. I'll draw it in for you if you can't quite see it. There it is. On this trend line, this is the 23.6% fib retracement. You'll notice these candles touched it from above and bounced every time, including last week. Basically started there and moved up to the top of the fib. So here we are. We're at the top. This time last week I was very, well, I wouldn't say very, but I was getting nervous and I was leaning bearish in anticipation that this red candle would end up turning the last week into a fail below this Fibonacci support and get us at least down to the 1140 range, but most likely 1120, where you have two levels of Fibonacci retracement, again taking you back to the long term from 2007. It was nice to see us break through that 1200 resistance level, and we broke through it with a vengeance on Wednesday, and Thursday and Friday just kept the momentum going. I wouldn't say the volume was necessarily breakout volume. Some people are concerned about volume. I'm not necessarily concerned about it here yet. I think we can still continue higher without massive breakout volume. But what's more important to me is this fib level. So 1225 is what we need to watch.